All right, well, hello everybody, and thanks for allowing me to come here and take some of your time up. Really appreciate it. As was said earlier, there we go. Let me get this little bit configured. I want to be able to see what everybody is asking me. All right, so we have some Ys so that everybody can see and hear me. We'll just double check on that. We'll go through disclaimer, get that out of the way, and then just so everybody in the beginning understands who's this for and what it is. You know, this is Moxie Trader. You ask, well, day traders, swing traders, or is it for investors? And I know it's a little bit kitschy, but it's for all of you, it's for all of us. And the reason is because the indicator is fractal. The rules are the same for any time frame. This goes all the way down. I use it personally down to the 2-minute, all the way up to the monthly. So that's why it can cover just about everybody. And hopefully we'll give some good examples of that today as well. So a little bit about me. How did I even get here? On the left, this is kind of a reenactment of my dad and I. He would manage his own money, and when he would come home from work, he would get on the computer, look up daily charts. Maybe some of you guys know what that is. It's an older one. And I would actually sit on his lap, and we would go through charts, and we look at stuff. And I think he was just trying to leverage my non-biased mind to just see some trends. So hopefully I helped make him some money. And then on the right, I'm very mechanically oriented. I like to work on cars and just about any project. Like my dad, whenever like my mom's curling iron back in the day would break, we'd take it apart and see if we could fix it. So that's kind of how my mind works. And I think a lot of us have probably seen and been in this situation before where we're at a seminar. Mostly we kind of know the crowd is there, but I don't know, have you guys ever seen a 12-year-old in one of these seminars? So my first seminar was when I was 12. My dad actually took me to Texas to go check one of these out, and I still laugh to this day to think that he flew me all the way over there and spent 2 days in a hotel room like this looking over stocks. And I didn't really learn much there because I was 12, but I do remember knowing that this was important and it was something that I should pay attention to and probably keep for my future. And so that's kind of how I ended up here. Obviously, my interests shape my trading style. I think that's pretty important for a lot of people. Some people loose and fast, some people are tight, some people are precise, some people can kind of just look at this like reading music off of a sheet. So on the left is my 1977 Camaro. I restored this when I was in high school. I still have it today. I love to take it out, go racing, and take it to car shows and just have fun with it. But as I said, very mechanically oriented. On the right, my dad and I are both pilots. He was in the Air Force, I'm a private pilot. And I do this because pilots use checklists. So it's very important that even traders have a checklist. You need to know what your rules are. You need to know how you're going to get in a trade, how you're going to get out, and what a good trade is. And that also goes to the go, no-go situation. So you kind of combine my very mechanical orientation, and then you also combine the checklist, and that's how I've determined my kind of trading style. And I think that it works for a lot of other people. That's why I'm starting to build a subscriber base, and they like that I'm very cut and dry about the trades and very mechanical with my indicator and how this system works. So a little bit relevant background, again, very mechanically oriented. I went to ASU Polytechnic with manufacturing engineering, graduated in 2010, and then completely sidestepped, and I went to financial advising with New York Life. I was self-employed there. Did that from 2010 to 2014, had my Series 6 and 63, so I was good and licensed. And then my first 3 years, and as you can see, I started dedicating myself to studying the markets in 2012, which was halfway through my New York Life career. It's when I was starting to make some money and I wanted to do something with it. I figured if I'm going to be in finance, I'm going to have to know it all up and down. Of course, wanted to be an active trader for income, and I was trying to figure out what to do with it and where to go, and that's where I found some trading software and education and support that I liked. And when I was at one of these seminars, remember from age 12, but recently I was at a seminar, and I remember talking to 2 of the mentors, and I asked one of them, I said, is this actually learnable? Like, can we learn how to trade? And she said, absolutely. She's like, I wasn't born knowing how to trade. Like, all this stuff is learned. Nobody knows actually how to do this from day one. So I said, great, I know how to learn, I know how to teach myself, let's do this. And so from that point on, I started participating in webinars from the 2 mentors several times a week. I even traveled to 3-day seminars that I would do that occasionally. You got to reinvest in yourself. So that's what I was doing. But again, my first 3 years, death by 1,000 small losses. I mean, I was very random. I was all over the place. I'd have some wins, some losses, but it just kept eating away at my account. It was very disappointing. I mean, 3 years I invested into this. But to understand where I am now, we kind of need to know where I was. And I've tried all the various indicators. None of them really worked for me. Again, keep in mind, I'm very precise, very mechanically oriented. And so something like this is the Ishimoku cloud, really imprecise in my mind. It's a cloud. I mean, how much more imprecise does that get? It doesn't work for me. Now, some people it's great, and more power to them. On the right here, this is the MACD. It's still kind of the same thing. It's like, okay, now I have to trade based on 2 squiggly lines. That didn't work for me either. And then down here, it's just 4 or 5 indicators. So now we have 5 squiggly lines, and that didn't really help me. And now we're trying to take things and line them up all 5 at one time, and that just drove me crazy. And then over here is the Bollinger Band, and I love the concept of the Bollinger Band, and I do look at it from time to time just to kind of see if there's more that I can check out. But it too is kind of like a cloud, and it didn't give me any precision about where is it going to actually turn around, where is it going to go up and down. I mean, you can see where it touches, it continues to go sideways, then drops a little bit further, and then it double taps here. It just didn't work for my mind and for my eyes. And so I started looking at my charts and trying to get everything figured out. And what I noticed is price would bounce off moving averages. This is the hot purple one is the 50 SMA, the salmon colored is the 200 SMA, and this doesn't matter what time frame it is. But I started to notice that they would bounce off these moving averages, but then other times they'd fall through them. And then sometimes they'd come up from underneath and skyrocket and continue walking up certain moving averages, but then other times it looked like they were going to bounce off of them and then they'd fall through. And I kept trying to think, well, how is there a way that I can figure out when these things are going to work with these moving averages and when they're not? And then I get things like this, like here's a huge pop, like, okay, great, it looks like a breakout. And I know some traders trade breakouts, but this was a false breakout. Like, is there a way for me to figure out that is going to be the case? Or how about this? This looks like a great rebound, but why is it not going anywhere now? And these were all the questions that I was trying to figure out as I just kept studying and studying the market. And so I finally took matters into my own hands, and that's when I created the Moxie indicator. Now, I know right off the bat, this probably looks like one of those squiggly lines that I said that I hate and I can't trade and makes no sense to me. But if you look at this, you'll notice that it's actually stair-stepped and that there's a 0 line and that it's red and green. But primarily the stair-step is huge. That's one of the biggest keys to this indicator. And what it does is it tells you how much momentum and velocity and energy is coming into it. And then with the 0 line, it tells you how much energy is in it. So the higher it is above or below 0, the more or less energy there is, depending if you're looking long or short. And so here's the little explanation of it down here. This is how you can trade the indicator by itself. Now, of course, I like to bring in price with moving averages to give me my go, no-go situation. But this is how we can dissect the indicator, and it's over and over and over. It's the same rules. So if you see here, we go from a lower low to a higher low, and that's positive divergence. And then when the Moxie indicator crosses through 0, that's our entry. Now, if you see here, this is the indicator kind of going red and green, meaning that, you know, it's up and it's down, and it's generally trending towards 0, which means this is weakness. And then once we hit 0, that's the exit. And here we go again, we have the entry. And then when you have 2 double tops like that, I'm assuming, you know, that price went higher, but the indicator didn't go higher. That's negative divergence. That says that energy and momentum and velocity can't get past the previous high. And then we have our exit. And then this is our lagging energy, and I'll go explain that when I get to the examples of this. So a little bit more, I've been refining this over the times and making sure that I keep offering better things to the customers and clients, and just makes it easier for trading. And 2 of those things that I've included are the Moxie warning bars, and what you can see is these kind of green bars right here and these red bars right here. And what that tells you is when energy and momentum and velocity is coming in or out of the stock in a more rapid than average or more rapidly than normal situation. So in a trend that's starting to go up, you'll start seeing some warnings before we actually get the trigger. And in the case of an exit, you'll start seeing some warnings before we get the trigger exit out. Now, these triggers are these arrows are basically just denoting when the Moxie indicator crosses through 0. So those never change. That's the same thing. It's just a better visualization for you. Well, okay, so somebody is asking me, what are the inputs? Well, it's a little bit of everything. So with the market, you know, there is only volume, and there's only price, and there's only time that we can be put into this. This one doesn't use volume. It really just uses time and price. So hopefully that answers your question there. As far as the rules for the entries and exits, they have the same exact rules, and this is really what makes it streamlined and easy for new people and even for experienced traders, because who wants to make this more complicated? What we're looking at is it's a two-part entry and a two-part exit. So for an entry, we want price over the moving average, and we want the Moxie indicator at, crossing, or above 0. And just flip that around for an exit. We want price below the moving average, and we want the Moxie indicator at or crossing below the 0 line. So look at this. It's exactly the same thing for an entry and for an exit, just reversed. All right, so let's go take a look at one of these charts. Now, you'll notice this Moxie indicator down here is the one that I had described earlier. So now we have the chart, the price chart, actually with it, so we can go through it. And this is where you're going to see my checklist that I use for trading and how we go through it. So the first thing we look for is positive divergence. You know, that's the point of this kind of momentum indicator, to tell us when pressure is coming in and some energy is coming in to the stock, because you know, oftentimes their price doesn't really tell us everything we need to know. The Moxie indicator tells us what's happening behind price and kind of behind the curtain. So what we see here is we have price down, but we have the Moxie indicator up, and that is the pressure that's starting to push price up. And you can see here, this is where we get our trigger. So we have our rule. Here is the Moxie indicator crossing through 0, we got our trigger, and price is over the moving average, and so it takes off. Now, what happens though is we kind of run into this other moving average. Now, mind you, remember the purple is the 50 SMA, and the salmon color is the 200 SMA. And as we continue on, we do manage to get over these moving averages, but in a very weak way. Notice that we have all these Moxie warning bars as price tries to go up. That's telling us something. It's warning us that even though price is moving up, energy is not supporting it, and that's a problem. And so you can see we're getting some divergence. We have the indicator going down, we have price going up, and look what happens. We get the rule. We get the price going through the moving average, and we have the Moxie indicator crossing through 0, so we get our price trigger exit, and good thing we got out, because then it fell down. So now we just repeat the process, you know, wash, rinse, repeat. And what we're looking at here is price going down, but now we have the Moxie indicator starting to move up, and that is the divergence that we are looking for to initiate a trade. And then the next thing we're looking for is we want the rule. And the rule is we want price over the moving average, which is here. And now, mind you, this is earnings, so it got a little bit of a jump, but let's just assume that this wasn't earnings and that this actually happened smoothly. But what we got next was the Moxie indicator crossing through 0, and we got our trigger. Now what comes next is we kind of let just price flag, because remember, I like to use the moving averages, specifically the 50, and we have the next term that I have coined with Moxie indicator as a trampoline move. So if we look at the 50 SMA as kind of the trampoline material, and we look at the Moxie indicator as the springs, as long as the Moxie indicator is above 0, that means that there's still gas in the tank, that there's still plenty of energy to the upside. And when price goes below the 50, that's not where it's supposed to be when the indicator is still above 0. And so it acts like a trampoline and throws it back out once it clears the 50 to the upside, and that's exactly what it did here. Now you can see we do get a little bit of warnings, and what do we get? We get warnings as price goes up, and we do in fact get a drop. So if you're a quick short-term trader, you know, maybe you'd like to take off a little bit right there so that you don't have to experience this drop. But this drop is yet another trampoline move. Price went below the 50 and the indicator stayed above 0. So we're looking for a re-entry as soon as price gets back on top of the 50 and it takes off. Now, I would be taking profits off something like this because it's just been screaming. You know, I'm not sure what the percentages are. Always good to cash green checks. You always want to keep putting money into your account. And then we do get a drop, but you know what? That's not our official exit yet. And we still have an actual trampoline move here. Price below the 50, indicator still above 0. And as price continues to try to walk along the 50 period moving average, you can see we start getting these warning bars again. And so now I'm taking this into context. And that context is we now have negative divergence. We have a huge run up in price, but the Moxie indicator couldn't get any higher. And that's telling us that energy is not supporting price. And so what do we get? We get a whole bunch of these warning bars, and then we get the rule. And the rule is we get our Moxie trigger exit, which is the Moxie indicator going through 0, and we have price going below the moving average, and I'm out. Now, if we continue to look at this a little bit further, you say, well, what about this that happened afterward? Well, this is also where the Moxie indicator is important. It shows you that this is lagging energy. The fact that the Moxie indicator is below 0 and price got back on top of the 50 meant that this is negative divergence and that the indicator actually started from a point of weakness because it was coming from 0. So I mean, it's like, you know, it's already behind the curve. It's already behind the 8 ball. I mean, look how late this trigger came from where price crossed the 50. And so what happens? We get a double top and we get the indicator starting to peel off even as price tries to hold it's over the 50. And look at this, it even saves us. We get the trigger just before this thing cascades over, and now it starts to waterfall down through the 50 again. So I love this thing. I can't tell you about how great it is. Obviously, I'm a little biased, but I can just show you guys situation after situation after situation. So here's a live chart. This is the S&P. If you guys have been following along, like obviously we've had a rough go at it, but look what we see here. Now I didn't show you the 15-minute chart on the previous one, but here's the 15, and here's that same divergence. We have price up, and look at this. We have the indicator continuing down like that. That's divergence. And if you look here, we have price doing kind of a double top area, and then we have the indicator going under 0. So now the indicator is actually in negative territory. And then what do we have? We have price underneath the 50, and we have the Moxie indicator underneath 0. That's my rule. There you go. There's the 2-part rule. Price under the 50, indicator below 0, get out. And that was our exit on the 15-minute, and it got real close there on the daily, on the hourly. You can see, and then after this, we got a little bit of a trigger. So looking at this, and now you can see that the Moxie indicator is way under 0. This is gonna, you know, I don't see us kind of rebounding too easily anytime soon. And if we do, it's going to be a false breakout, and I'll show you some examples of that. But notice how price has just cascaded down and following the hourly 50. In fact, yesterday, you guys see how it tapped the underside of the hourly 50? Well, I knew it was going to be going down the rest of the day because the Moxie indicator was below 0. There's no way that price can get over the hourly 50 with the indicator this far under 0. So let me show you a couple of good examples of how this thing has been running, and then also some exits. And let me know if you have any questions about this. Manny, as far as if it works on the tick chart, I primarily just use this based on time. And so that's really how this is designed, is with time. Now, it can work on futures. You need to kind of change some of your rules as far as the moving averages, because there are more time with the moving averages. So like the 50 period is going to be a little bit different on futures. This also works really well on Forex. I have a client right now, he's trying to build a case for it. He's running some tests on it, and he says so far so good. He's really enjoying it. And it can work on bonds, and it can also work on day trading. So I'll show you that one too in just a little bit. So here's Fossil. And look, down here on the hourly chart, we had the same situation as VRX. Notice how we had price here doing a double bottom, and we have a huge divergence here on the Moxie indicator, and same thing as VRX. We had earnings that popped. So it came up, and look at this. Here's our exit. You know, it broke through the 50, and the indicator broke through 0, so that told us that this was going to be a false run, and it fell back down. Now what do? We wait for more divergence. So here we have price level, and we have positive divergence right there on the indicator, and look, we get a price trigger right there. I'll keep zooming in for you guys. Right there. Perfect. That's what I like them, is a nice low trigger right as price is crossing through the moving averages. Come up through here, and you actually see a little bit of a warning. You can see how the indicator didn't want to go up any higher despite price going higher. But this one, I would you got to put these things in context, and we had the 200 below us, and I used the 200 as a trend backstop. And then if you also look at the daily, and this is why I use multiple time frames so that I get the full picture. You can't just trade with one time frame, because you'll be looking through you know, you're going to get like telescope vision. You're only going to be able to look through this very narrow thing, and you won't know what's above or below you, what other moving averages could help you or hurt you. So in this case, when price came below the 50, it got cradled by the hourly 200, but it also is getting cradled by the daily 50. And look at the indicator here on the daily chart, still above 0. So we're great on the daily chart. And look, on earnings, we get actually a trigger just before earnings, and then this thing pops, continues to run. A little bit warnings, but it doesn't fulfill our 2-part exit, and it just continues to walk itself up the hourly 50 SMA. And now, what do we have here? Here's price up. Here's the Moxie indicator really, really down. You can see I've already drawn in lines here. We get all the Moxie warnings, and then what do we get? We get our exit. Price below the 50, and our trigger, which is the Moxie indicator going through 0. And just like I showed on VRX that this is a trap, look here, price tried to bounce back over the 50, The indicator said, I'm not confirming. Look at this. I'm under 0, but price is over the 50. That is negative divergence, and you should not go in. And I'm going to warn you again. And now look at the price. So this was a perfect exit. This was a false breakout, a false move. Don't get sucked in by it. And this is now proving that that wasn't going to work. All right, now, just so you guys don't think this is all smoke and mirrors, I want to show you a couple trades that didn't work out for me, but how the Moxie indicator kept me safe. So coming into this setup, you can see here that we have a double bottom. There we go with the computer. And we have divergence with the Moxie indicator. We have a nice low cross of price over the moving averages, and we have our price trigger. So that's a good entry right there. Now, as it comes along, looking like this, looks like it's kind of just flagging. And I was willing to let this one kind of go because the 200 underneath us was pretty close, so my risk was still low, and especially with my entry right here. And if you look at the daily, we still had the 8 and 21 EMA very wide, and so I call that a moat. And in this case, it's a good moat because price can't cross that moat until that moat disappears. And so we even got a daily cross of the Moxie indicator right here. So we continue to try and go up and up and up, and I'm looking at this, and this is now starting to give me some concerns. Look at the Moxie indicator right here. See how the Moxie indicator was just hovering around 0, and it was red and green and red and green, and just looking terrible, even though price was over the 50 and price wanted to go up. So just literally the day before this thing dropped to $31 and then cascaded, you can see right here we got the exit on the Moxie indicator. I can't tell you how great this thing works. All I can do is keep showing you guys all the examples about this, and that's that was our heads up about this not working out. And there's our trigger, price below the moving average with our trigger. That's how you get out and you miss this huge thing. And I'll show you another one that didn't work out for me. SMAR. This is one of the newer ones, the new IPO. Here you go. Here is price. As far as an entry, here's price above the moving average, and we get our Moxie trigger. So that's your entry right here. We have a big run up, okay, fine, it comes back down, and now look at this. We have a trampoline move. So price below the 50, but the indicator still above 0. We run up. I actually added to the position a little bit here, and and what did it do? It went right to the previous top. And what do we get? We got negative divergence. So there you go. Now I didn't catch this right up here. This happened and then it dropped in one day. But look where we got our exit. Price broke below the hourly 50, and we got our trigger exit. And this was my exit right there. Entry, tried some more, didn't work. This is why, and there's our exit. All right, how's everybody doing out there? Any questions on this? I want to make sure that I'm doing a good job showing everything that we need. So here's Shake Shack. This was one of my bigger winners for the last couple months. Love this one. So look at this. Kind of came up, did a little fake out dip, and then just before earnings, it bounced off the hourly 200. It got above the 50. Here's our trigger. So this is our entry on the hourly chart. And look, we also got the same trigger on the daily chart. Price over the moving average, and we got our trigger. Earnings was good, so it popped. It went sideways. I saw this. I did take a little bit off just in case, because if this thing fell, it could go down to like the hourly 200. I didn't want to have to deal with that. So I just took a little bit off. You always want to cash those green cards. And look at this. Once it finally got back in shape, it got over the 50, came back down, and started to ride the 50 up. And now, given that this thing was like a pop and run, it does throw things a little bit off. That's why I was reverting back to the daily chart. Look at the daily chart, just looking stunning. Now, I did take the rest of my position off right here because I just, I gained 53% on this thing, and I thought that was pretty good. And with the whole market not doing so well, here's your trigger, here's price below 50. This is the fake out right here. Price tried to get back on top of the 50, and the indicator was below 0. Do not get suckered in for something like that. All right, now here are another two. So CROX, this is a trade that did work, and then I'll show you one that had basically the same setup, but the Moxie indicator didn't trigger, and so you were safe. So what I look for primarily for indication that something is going to pop and move is I look at things moving and bouncing off of the moving average. So in the case of CROX, CROX, here's our daily chart. We have price that was coming into the daily 50, and it looked like it was going to bounce off of it, or at least I wanted to find out if it was going to bounce off of it. So I look down to my hourly chart here a little bit, and at this point, here's earnings. Fortunately, we got that out of the way. I don't really like trading earnings. I'm sure you guys know this. It makes things kind of bounce all over the place and be very problematic, to say the least. And now look, price is underneath the hourly 200, so no trade. You can see how, let me zoom in on this for you. You can see how price kept like bumping the top of the 200 here, and it just couldn't get anywhere. Now obviously it's not paying attention to the 50 because it just doesn't care about the 50 at this point. But look at this. If we draw a line here, there is clearly a level that price is kind of staying at, but look at the Moxie indicator here. It's starting to move up and up and up. And this is something that we need to pay attention to, be very cognizant of, because this is the pressure that is building underneath price that price isn't necessarily showing us, and it can be tricky. This is why I always kind of say price is a facade. And then what do we get? So we have our divergence. Remember the checklist. We have our divergence, which is starting to give us pressure for this thing. We have a reason for price to move because it looks like it might be bouncing off of the daily 50. And then we have the rule. We have price over the moving averages, and we have the Moxie indicator crossing through 0, which gives us our price trigger. And look at these, all these green Moxie warnings coming into this thing. I mean, I don't know how many more heads up that we can get that this is going to be clear move. And so you enter right here, and you just let this thing walk itself up the hourly 50. And now look at the top here, and I'll zoom in on this. Look at all these Moxie warnings we're starting to get. That's telling us that even though price is still kind of moving up, that energy is coming out, you know, so behind price, behind the curtain, a whole lot of energy is starting to really come out of this thing very quickly, and we should probably double check things. And so what it did, it kind of did a little break, tried to walk itself up the hourly 50. I mean, it's like a broken record. It's over and over and over. Price trying to come up, but the indicator kept going red, and down, and finally we got our trigger here, which is where the Moxie indicator crossed through 0. And shortly after that, the hourly 50 could not hold up price anymore, and this thing just dropped like a rock. So there you go. Straight in, straight out, using the same procedures. This is the divergence to the downside, just like that. We have our divergence to the upside. So you can clearly see these things coming and going. Now, LLNW was one that I was stalking for exactly the same reason as Crocs. You know, here's where it had a good pop on earnings. It seems like it should be great. Looks like it could be flagging into the daily 50, and I'm looking for this thing to bounce off of the daily 50, and I'm looking for a confirmation on the lower time frame if that's going to happen. And you can see I've been drawing some lines in here trying to say, okay, well, here's a double bottom. It did the same thing as Crocs. Couldn't quite get past the hourly 200. Couldn't quite get past the hourly 200 again. Still couldn't do it here. And so it came down. And at this point, I drew a line because now we have our double bottom and we have our divergence. You know, technically at that point we did. And so I'm looking at this thing thinking, well, is this going to happen? I mean, I know what I'm looking for. I'm looking for price to get back on top and to have our divergence finally cross above 0, but it never came. So price continued to fall underneath the hourly 50. The indicator continued to fall back down. We never actually got our price trigger, and we never got price over the moving averages. So this was never a good entry, even though I've been watching and watching, trying to see if this thing was going to work. So the Moxie indicator kept us safe. And look here on the daily chart. We even got confirmation to the downside that this thing wasn't going to work. And if you want to back up a little bit, look at this. Here is price down. Here is the indicator going flat, so that's giving us our divergence, our pressure to the upside. And look at this, we got price above the moving average, and we got a Moxie price trigger just before earnings, and it popped. And then what did it do? It walked itself up the hourly 50, but then you notice that we start getting a whole bunch of Moxie warning signals, and here's your divergence. Price up, indicator going real red. And look at this, we get our Moxie price exit signal as price crosses through the underside of the moving average. So here's your entry, here's your exit, and I'd say I think we got about 90% of the trade on that one, or 90% of the trend. Dennis, it can work for shorting. You want to be careful of the market itself because let me just show you with, I think it was Fossil. Sometimes we can get little dips like this. So you just have to put it in context. So as with any system, you know, they don't work 100% all the time. I'm not going to be blowing smoke or mirrors up like that. But up in context, you want to make sure that if you're going to short something, make sure that you've got plenty of room to the short side to continue doing that. Now, if you look at the daily, here's a short entry. It's under the moving averages. Looks great. Here's another short entry. It breaks back below the moving average. Great. But same thing with going long. You don't want to just blindly follow these long entries either, because look, here's where we got our trigger, but we're still under a downtrending moving average. It's not until we finally get past both of these moving averages that price is able to go. I'm a huge proponent and I have big conviction about moving averages. Just like I showed earlier, I think they're very important. I think price tends to respect them, but as you can see, price sometimes will not respect them. And that's where I've had the hardest time trying to figure out, well, okay, if price moves up these moving averages and follows them or doesn't follow them, how do I know when that's not going to work? And that's where the Moxie indicator gives me that information to know whether or not the moving average is going to be firm like this and actually just bounce and walk itself right up the moving average, or if it's finally going to break and fall off the moving average like this because the Moxie indicator is totally dead and under zero, and energy is totally trashed. And Dennis, yes, it does also work on the 2 and 5 minute. Let me show you that for the S&P because we had some today. So if you see here, I'm kind of looking at this. I'm looking at price down like this. This is the 15-minute chart. I'm looking at the indicator giving us some divergence right here. But for the 15-minute, I'm still waiting for price to get on top of the 15-minute 50. So we're not quite there yet. Even though I see pressure coming, it's a two-part entry. I have to see the divergence. I also want the indicator over zero, and I want price to get over that moving average. So if we look here, you can see one that did work. Here you go. Price was coming down, found a bottom, ran right into the underside of the 5-minute 50, got knocked back down, but look, what do we get? We got price down, indicator hugely up, huge. And so what did it do? The fact that the indicator stayed above zero when price was below the 50 shot price back up, and it just walked itself up the 5-minute 50 right here. Took a little dip as it ran into the 5-minute 200, and it managed to get past it the next day. But then remember context right here, this was yesterday. This ran right into the underside of the, I'll show you, ran right into the underside of the hourly 50. So this is why I use multiple time frames so that I have context, so that I'm not down here in the weeds on the 2-minute and the 5-minute and say, oh, well, why did this thing reverse on me? Well, because it ran right into the underside of the hourly 50, and it also hit this previous price level. So you need to kind of, it's like reading a book. You need to be able to see all the various pages. And Manny, it is available only for Thinkorswim right now. I've been having this thing in development for quite some time. I want to try and get it on TradeStation as well, but they're having some problems over there getting me ported over. So Thinkorswim, I love the Thinkorswim site. If you don't really want to put your money with Thinkorswim, no problem. I have most of my money actually with Schwab because I like what they do over there, and I've been with them for years. I use Thinkorswim primarily for a charting platform. And if you guys see, this is also how I gray out all my price, because I really don't care if price went up or down. I care where price is in relation to the moving averages and also where the Moxie indicator is. So that's what I'm checking out. All right, I'll show you one more, CVNA, and then I'll go over and tell you all about the pricing and all that good stuff, Okay, so check this out. This is where I had it written. Remember, I'm looking at this, doing my searches. Oh, let me mention that I do have a scanner. So I have a Moxie Trader scanner, and what it scans for is the price triggers. So that's how I came across Carvana, is this scanner, this trigger right here, this arrow on the hourly chart popped up, and I then kind of looked at this and I was like, ooh, I really like what I'm seeing here. First, price looks like it's flagging into the daily 50, and the indicator's above zero on the daily chart. So that's telling me that most likely price is going to be bouncing off the daily 50 because there's still energy to the upside because Moxie indicator is over zero. That should make the daily 50 firm, and price should then bounce off of it. So then I look down to the hourly chart to get a more precise look at this and say, what am I seeing? Well, I see a double bottom with price, and I see big divergence here with the Moxie indicator telling me that there's some pressure in this thing and it's gonna work. And since the Moxie indicator triggered right here, I looked at this, okay, we have price above, where we have the indicator above zero, and we price over both the moving averages on the hourly chart, we obviously have price over the daily 50. So I went in right here, right in this area. And then this thing ran up, took a little dip, no problem. And then it ran up right here. Now, as I said, this thing ran up something like 40%. I forget the math. You know, when you're up that much, I'm just going to be taking some profits. So I took some profits up in this area. You can see it was kind of like spiking a little bit. Now it ran back down. I said, okay, no problem. You know, this might be a trampoline move. And look at the daily chart. The daily 8 and 21 is still really, really spread. So the upward momentum of the stock is still good. And so I let it do this thing, came back down, came up a little bit, came back down. Now I'm getting a little bit worried because price can't get back on top of the hourly 50. And then I actually got the price trigger exit. So you can see here, this is where I actually exited the last of my position. Now you say, well, price is up here. Yes, it is. Price is on top of the 50, but look at the indicator. The indicator is below zero. This is negative divergence. Price should not be up there if the indicator is down here. And so I am not touching this thing right now. I'm going to let things kind of continue to settle out and kind of feel it out and see if there's a better entry at this sometime in the future. I mean, look, it looks like a great stock, but that is not an entry right there. And I'll show you an example of why that is not an entry right here. Let me, sorry about all the wrong drawings. I like to mark up my charts. But you see right here, you see in this section up at the top right how price is over the purple line, which is the 50 SMA. And you see how the Moxie indicator is below zero. It was green for a little bit, but now it's red. You see how it could never quite get over zero, but price was over the 50? That's the negative divergence that I was just talking about Carvana. So price can't be above the 50 when the indicator is below zero. That's a negative divergence situation. It's telling us that energy is negative, that it's below zero, and eventually that's going to continue to pull price down, and that's exactly what it did. So I actually liquidated all of my position right here. I bought a little bit more here as it bounced off of the hourly 200 and also the daily 21. You can see that those line up on each other. And then when it came up here, we got a double top. And look, we have huge divergence right here on the indicator. And so between those two things, I was like, I'm out. Got all my money. I'm out. I think it was 25% total from the entire move from where I got in back here. And then for this little bump, I don't know, it was like 5 or 10%. Forget the math, but it was a nice little payday. So I kind of double dipped right there and then got everything out right there. All right, so let's go over to my website. We got moxietrader.com here. You can also, well, I'll run out through more of that. I have plenty of demos. I mean, I love this stuff. I could do this all day long. In fact, I do. That's why I'm here. I got tons of charts just to show you guys that this thing is real and consistent. You'll notice that all the rules are the same over and over and over. You go over here to videos, and I have all my videos here. I like to keep this one at the top so you can kind of watch this over again and see the basics about the Moxie indicator. And then, yeah, stock trends and changes. You know, I try to give basic education too, just so everyone can understand how to trade. You know, I understand that my trading is kind of tied to the indicator, but you know, I use moving averages, so you can still learn a fair amount from watching what I do and seeing how it goes. So let's go over to this real quick. I give live interactive mentoring webinars every Tuesday at 8 p.m. Eastern. That means, you know, I got my class. It usually runs about an hour, hour and a half. It depends on how many people are asking questions and engaging with me. I have no problem unmuting somebody if they actually want to like talk and ask me questions, because sometimes it's a little hard to explain things over typing. And then on Fridays, I send out a recorded weekend webinar. You know, I figured not too many people want to tune in on a Friday afternoon. So it's kind of like the week recap. And so you get 2 webinars sent out, each of them about an hour long, twice a week. I'm on Facebook, just look up Moxie Trader. I'm on YouTube, same thing. And then Twitter, it's Moxie_Trader. And then for the Moxie Indicator package, we have a coupon. It's $250 off. It's coupon code TALKMOXIE. And if you want to just check out the webinars, it's the webinars for 6 months. I'll give you 20% off that with Talk Webinar. So let me run over to the website, show you everything that you get. So here with the webinar series, you know, I think that's pretty basic. You guys understand I'm going to be doing exactly what I did here. I review a bunch of stocks. I show how the indicator works. I teach people how to trade. So if you guys are new, I mean, look, I told you for the first 3 years of my trading, I even had 2 mentors. I did not know what I was doing. I couldn't quite figure it out. I studied the MACD. It didn't work for me. I mean, I tried 3 years and I had 2 mentors and I just couldn't do it until I finally got some parameters with the Moxie indicator, and that's really what has helped me. And I haven't looked back since. So I will teach you how to trade. I will teach how the Moxie indicator works. I let people know what's coming. I'll let you know all the trades that I take, all the exits I take. If people have their own particular stock they want me to look at, I do that as well. And all of that is in the Moxie Mentoring webinar series. So here you go, Moxie indicator. You get to own it. You know, that's with Thinkorswim. I send it to you. You own it. It's a one-time fee, you know, and then you get to keep it after that. No contracts, nothing like that. You get the price signals. That's the arrows. You get the Moxie Scanner that shows you where the arrows show up so that you don't miss a good setup and a good trade, because you'll see with my 2-part entry, we want to enter when we get that trigger and when price is over the moving average. So what better thing than to scan for that trigger? And then because I want to make sure that anybody who purchases the indicator and becomes a subscriber, that they know what they're doing, that they know how to trade and they know how to work the indicator. So I include 3 months of these webinars with it to make sure that you guys get a good running head start with it. And then if you like the way my charts are set up, so you don't want to have to reinvent the wheel, I include my Moxie chart setups and views with it. You know, you get all that for $2,900. And for you guys, the Trader Talk Live participants that are here, remember, you get a $250 coupon discount off of that for, what is it? Let's see, Talk Moxie, that's right. And if you guys, maybe this is a big chunk, PayPal does some credit, and so I think they do free crediting for several months, and so you can do financing available with that. Now, I know some of you are probably looking at day trading. I'm looking at my other chart here, so I wanted to show you something that's coming up with the S&P and how this works. So remember, on the 15-minute, we're looking at some divergence that's coming in here. And look at this. On the 5-minute, we also have divergence coming in. Here is price going down. Here is the indicator going up. And the same thing that we have that we had in the back here. Let me zoom out just a little bit. Remember this situation where price was below the 50 on the 5-minute, but the indicator was above 0? Look what we have coming right here. Price tried to get above the 50, couldn't, so came down here, and now we have a big positive divergence situation happening. We had price below the 50, but the indicator stayed above 0. So just like I showed you on some of the exits, that negative divergence, this is positive divergence, and this is going to be important because now we have price back over the 5-minute 50, we have the indicator over 0, and there could be a little bit of a run from here to probably the 5-minute 200, which would be also about the 15-minute 50. And then I'll show you one other pattern that I look at. It's called the elf shoe. If you look at this, here's your leg, here's your heel, here's the arch of your foot, here's the ball of your foot, and then imagine that elf toe, that curly toe that they have. That's usually what comes next, because what we're trying to do is we're trying to narrow this gap between the 8 and 21 so that the 8 can get on top of the 21, price is free to actually move. So we're starting to see some developments of price bottoming on the S&P, but we're not quite there yet. Look here, the indicator isn't quite over 0 yet. And so this is the kind of stuff that I'm looking for. I hope this helps you with your trading. Let's see if maybe this is the bottom with the S&P, and this is how you watch for those who are day traders, even swing traders, to see this thing start to bottom and turn and come on up. So Tanya, I think that's my time. I hope everybody enjoyed that. Go ahead and check me out at moxietrader.com, and again, also on YouTube. I got a lot of information out there, and I'm willing to help anybody that I can. I did see one question that I didn't get to answer. Somebody was asking if the bar needs to close over the moving average or just pass through the moving average. And yes, generally, I want it to close over the moving average. Even more so, I want it to test the moving average. So I know my charts aren't up here again. There we go. Okay, so now let's go back here. So as far as, here's just a good example right here, guys. You see how we got our trigger here, and you see how it's up above. Now this is the hourly chart, so yes, and primarily I'm an end of day trader. So as far as my swing trading, it's end of day. And so we'd be getting a bunch of these bars right here. I would look for the end of day to confirm that this bar, and primarily the daily bar, has closed over the moving average. Well, look what it did here. We got our trigger. That means the Moxie indicator is above 0. We have price above both of the moving averages, and then what it do? It came back down and it tested both of these moving averages, and then there you go, just like clockwork, shot up, and that is huge. And so going to Dennis's question, that yes, I prefer to see them close over the moving average, and then I love to see them test the moving average. That tells me that the moving average is now firm and that price doesn't want to go back down through it, and so the only other direction for it to go is up. And then after that, you can see, let me zoom in a little bit or zoom out. You can see here it starts to bounce off of here. But what do we have? We have price trying to find its level, and we have the indicator just going down, down, down. So this is what was telling me that the hourly 50 in this case probably wasn't going to hold price. And look at all these Moxie warnings that we got telling us that a whole bunch of energy and velocity and momentum was coming out, and price was no longer really respecting the 50. And so the next course of action, it failed. But where'd it go? It went to the 200. And that's why I say that I like to trade off the 50, and the 200 is our backstop. So the 200 is the overall trend. Now bring that to today, we're under the 200. So now we're in a problem. We're definitely in a pickle here. This is problematic. And as far as that day trade I was talking about seeing this thing set up, just keep in mind that any kind of up that I'm seeing is going to be very limited, because we're still under the 50. We still have the 200 as a ceiling, and the Moxie indicator is way down here. So this goes to the question of any day traders. And this is actually, for me, my mode. I switch to day trading in situations like this, because clearly the market is not in a swing long type position. I'm not much of a short trader. I don't really have to do that. This has been a very choppy ride down, but I'm starting to see this double bottom area, and I'm starting to see some pressure, some upward pressure on the lower time frames. So I'm gearing up to take some day trades as we start getting some chop in the next few days. So I hope that kind of answers any questions for anybody like that. That's how I'm able to be versatile and still make money when the overall market is just misbehaving, so to speak. I think another one was NR. Yeah, so look at this one. Same situation as I talked before. I look for a reason for price to move. Price came into the daily 50. So I look below to say, is this thing going to bounce off the 50, or is it going to fall through the 50? And if we look here, here's our double bottom, here's our divergence, and look at this. Here's our price trigger on the Moxie indicator. If I zoom in a little bit closer, you can see we had a huge price bump up. So just like I just showed in the S&P, I'm not willing to take this. This thing is floating in midair. It's away from the moving averages. No way. And now price came back down, and look what it did. It sat right on the hourly 200 to confirm that it was strong. Moxie indicator came up through zero. We got our price trigger right here at a nice low entry point. And I wasn't paying too much attention. I didn't catch it till the next day. And so this is where I purchased. I had one day of glory, and now it came back down here. So I'm back to break even, but so far so good. Price is still above the hourly 50. It's still above the 200. Moxie indicator is still above zero. This is just the normal ebb and flow of the market, and I'm not too worried about this thing. So that's one move that worked out. And Tanya, I'll just keep going until the person's on, or if you want to switch or do something else. So you just let me know.
Okay, no problem. Keep going.
Here's another situation where a trade did not work out, and I'll show this on a couple of different levels. What you can see here, I was looking at this one. Price was doing a double bottom. And you can see here that we had our divergence. So I'm getting ready. I'm looking at that. You can also see that price was flagging into the daily 200. So again, this is the nice thing I like about this, guys. And I know I sound like a broken record, but being a broken record when it comes to trading is good, because it means you do the same thing over and over, and you get bored, and then you make money while being bored. And so it's good. It's we're trying to take the nail biting, edge of your seat type stuff away, because then you can't think rationally. You start thinking emotionally, and then you become irrational, and that's going to be problematic. And so I do the same thing over and over and over, and that's why I think that the Moxie indicator in the system works well for you all. So coming in here, bouncing off the daily 200, I see that below here on the hourly, there's good reason for it to possibly set up like that. We have earnings, got that out of the way, and then look, I'll zoom in a little bit for you. We got our Moxie price trigger as price is just sailing past the 50 and the 200. And so end of day trader, I got in here, and things look good. I let it flag into the daily 50 or the hourly 50, The indicator was still above 0, and so I let this thing walk up the hourly 50. But then look what happened. We started getting all of these Moxie warning signals to the downside. I'm thinking, well, what's going on here? What's the problem? And so that gave me a heads up, because look, we have price up and we have the indicator down. So there's our divergence that we're talking about and giving us a headache. And then we had price go underneath the hourly 50. We got 2 exit signals, and in this case I'm going to just ignore the long, because I'm getting a whole bunch of warnings here. The indicator is imploding on itself. Price got stuck underneath the hourly 50, and then once this thing broke the 200, it just cascaded on down. So I got out right here, basically a few bucks, if not break even. And then what you want to do is look at a higher context. Look what happened here. So from day one, we probably knew that this wasn't going to work out, because look at the daily chart. The daily was over the hourly or the daily 50, and the Moxie indicator never made it to 0. So just like I was showing on Fossil and LL&W and all these other ones, Carvana, Carvana's in the same situation. Price is over the 50, but the indicator is below 0, and what did the indicator do? Pulled it back over. So the indicator not only tells you when a good move is and gets you in, it tells you when to get out and when a move is just failing and not doing too well. All right, take a look at Apple. There we go. Now we get it loaded. So once again, looking at the higher time frame, here is price dipping into the daily 200. Now I kind of plunged way below it, but what I'm looking at right here is, look at this. We have our divergence down. So price down, we have the Moxie indicator up, and then if we look in real close to that, you can see right before earnings, we had price clear the hourly 50, and the indicator was just one hop until it got to 0. Now, just like BRX, and I think it was Fossil, same thing. Earnings, you never know what's going to happen with earnings, but this gave us a good indication that earnings was going to be all right. And here you go. So even if you got in right here after earnings, just to wait for the chaos to settle down, look at this thing, continued right on up, and then it flagged a little bit. Now, I would definitely be pulling off a little bit here, just because, it could fall down to the hourly 200. We were getting some warnings, but when you get such a pop like this, it kind of throws off the Moxie indicator a little bit. As it turns out, it continued to run up. We got a late confirmation here. This is where I was talking about before, where the indicator started from below 0 when price was actually above 50. I showed this in the beginning with the VRX situation. And so you're like, okay, well, this is great, but no. It quickly turned around. Momentum went negative, went back to below 0. We got our price trigger at below 0, or we got our price trigger exit. The price went below the 50. Look at this. It got trapped by the hourly 50, and we knew that it wasn't going to be able to get back over the hourly 50 because the indicator was red and below 0, meaning the momentum was negative. The 50 turned into a ceiling, and price is now falling down under the hourly 50. Now it is coming into support of the daily 50, so we'll kind of have to see what that does in the future. But as far as my swing trading, here's my entry. I take a little bit off right here, and then I would be all out right there. So did that work out for you, Gordon? I would imagine this is one you're trading, that's why you're asking for it. But there you go. I mean, it doesn't get any better. So other than earnings, here's 90% of the trade, 95% of that trend. I mean, it's delightful. I love it. And GBT, this is another one that I've been looking at. I'll show you too how this one didn't work out and how the Moxie indicator let you know that it wasn't going to work out. So starting from even way back when, look at this. On the daily chart, price looked like it was kind of walking itself up the daily 200, which is the salmon colored line. And it did manage to get itself over the daily 50, but look where the daily indicator is, way below 0. So even though we might have seen potential on the hourly chart, and we're like, okay, maybe there's good trade in there, we need to know that on the daily situation that the indicator is still operating in negative space. And so when price gets over our moving average requirement, it's divergence. This is false. This is the tail wagging the dog. Price should not be up here if the indicator is down here, and the indicator is going to eventually win, and that's exactly what it did. Is it pulled itself off of the 50 and collapsed. Now it's been getting a little chaotic, so I'm not looking at anything like this. It's nowhere near a setup for me. And if we were thinking that maybe this was going to work, we have a trigger right here to get in where well, okay, it's over the hourly 200, it's over the hourly 50. Maybe we'll just take this. We'll try it. So if you want to say that you entered right there, so it ran for a little bit, and then what happened? We get right on cue. We get our Moxie trigger exit. We get price below the moving average, and there's your confirmation. So you get in, you get out, break even. I mean, name me more tickers. I can do this all day long. There's nothing, I didn't cherry pick anything. You just gave me 2 tickers that looked great. This thing has just revolutionized my trading. So I've been doing this for 6 years total. The first 3 years with my mentors, I couldn't get anything figured out. And then I walked away from them, and I had to figure out, what do I need? What are my requirements? How does my brain work? What do my eyes need? And that's where I started to kind of pull apart and dissect a whole bunch of other tickers, indicators. And that's where I started looking at this and saying, I think I need to build my own. So let's go down here, see if there's anything. This one's a little tough to day trade, but here's your indication right here. Price down, indicator up, right there. This one would be tough because it took such a dip. But if you wanted to try something, where I would feel comfortable is when price finally got back on top of the 5-minute 50, which also got back on top of the 15-minute 50. And then as long as the indicator's up and price is over the moving average, you're good. And then as far as an exit, here's price up, and look how negative divergent that was. And then your exit would be right as price gets underneath the 5-minute 50, for a day trade. Now, personally, I'd be looking at something like this, be like, double top, indicators dying on me. I'm just going to get out as soon as it kind of breaks down here. That's a pretty good trade for a day trade. I mean, that's really good. That was $10 for a day trade. Holy cow. All right, let's see, CELG, Celgene. Now, before I even look at this, I'll just say that some stocks do better with the Moxie indicator than others because some of them are very choppy. So, all right, Gordon, I would imagine you're trying to figure out, hopefully you're not still in this and trying to say, well, is this thing going to turn around and can I be saved? Hopefully you'd be looking at this thing like, okay, it's at the bottom, maybe it's bottoming out, and where's a good entry? So I like to always look at the highest time frames first to kind of give me context and see where I am. Number one, I don't see any bottom except for potentially, where'd my cursor go? Potentially here, just because it's a congestion level right here. This was the last area that price did a whole lot of chopping around. But as far as any kind of moving averages support, I don't see anything here yet. And if you see here, the Moxie indicator on the weekly chart is just totally trashed. Hasn't even turned around, hasn't even turned green. And for anybody who's long-term, check this out. Now let's see, where do we want to go with that one? That one right here. Here's price up. Here's the indicator down, right there. And there's your divergence. And look at that. We got our price trigger exit right there as price started to fall off of the weekly 50. Pretty good, huh? And then here's the other one. Here is the indicator down and price up. And now this probably didn't catch it right at the top. It probably caught it as price falling, but that's why I like to use the lower time frames. So that being said, we're trying to look at something like this, and remember, as I said, with the upside, whenever you get big jumps that usually happen on earnings like this, it does throw the the Moxie indicator off a little bit, so it kind of has to recalibrate. So even though I'm seeing a whole lot of positive divergence like this, and even though the Moxie indicator did cross through the 0 and we got a trigger here and here, this is why I have the 2-part rule. We need price to get over the moving average and test it, and then we also need our confirmation with the Moxie indicator, and neither of that happened here. So if you look back here, we got price over the 50, but we didn't get the indicator, and so price continued to fall back down. Here, we got the trigger, but price didn't confirm and didn't test the daily 50, so no trade, and continue to go down. Now we have another trigger, but we're still under the moving average, so we're still waiting to see if this thing is going to shape up or develop. Now you can say, Now there's nothing there. Really, I just don't see anything yet. As far as the hourly chart, look at this. It's still getting rejected by the hourly 200. Yeah, the indicator's over 0, but this thing is still getting pushed down. There's really just nothing here to be seen. Yeah, so if you want to go short, maybe, but as I showed before, you're running into a congestion area, and so that might be just tough a little bit. Let me show you, say, IMAX. These are some of the ones that I'm trying to think off the top of my head. So look at IMAX. You see how it dropped also? It had a huge drop like this. There is the possibility to find the bottom, but to find the bottom, it's going to be a choppy ride. Look at this. Came up here, came back down, came up, ran into the 50, came back down. Now, if you look in here, I'll start showing you guys some of the teachings and some of the words that I use and terminology. So we have the 8 exponential moving average here, which is the light blue line, and we have the 21 exponential moving average, which is the kind of orange line. And I use this for all of my time frames, weekly and below. And look at this. So you found the bottom, and it ran up, and look what it did. It ran right into the weekly 21. So this is why, even if you guys trade on the hourly chart or trade on the daily chart or something like that, I like to use all the charts because I need to know why the daily maybe looked like it probably ran into thin air, like just hit its head. Well, it's because it ran right into the weekly 21. I use these moving averages, I use these time frames because they're important and price usually respects them. So it came back down, found some bottom and popped back up, looked like it was going to hold, touched the 50, got rejected, and then because it couldn't get through the 50 because the Moxie indicator was still below 0, this thing torpedoed and fell back over again. Now look, we did it again. Here's your down, up, down, and now we have price trying to get through the 50, but one more time, it couldn't hold the weekly 50 because the Moxie indicator was still below 0, so what did it do? It fell back down. Now, I am actually looking at this. I did purchase IMAX just the other day right here because look at all the moving averages. And here's another little terminology that I use. So, that moat that I talked about earlier with the 8 and 21, well, all of the moving averages can act like a moat. So back in here, look at how much distance there is from all the moving averages. And look at here, how much distance there is from all the moving averages. That means that if price wants to change directions and go back up here, it has to get through all of these moving averages. And all these moving averages act like a moat. That's all they do. Like price has to cross this and cross this and cross this one before it can finally get up there. And not only does it have to do that, it has to change the direction of these moving averages. So that's why I'm looking at something like here is now look at all of the moving averages. They're all stacked on top of each other. And now that moat that price has to get across, it's a little puddle. It's just a little something right here, and price can just hop right on top to the other side. And now look at this. It's now changing the direction of the moving averages from down to flat to now potentially starting to go long. And what do we have also? The Moxie indicator is just one notch away from getting on top of 0, meaning that energy is positive. So if you want to look at something about how if the trend is going to be turning, this is how you see it. And it's going to take forever because this is a weekly chart. Each one of these bars is 1 week. I mean, this thing has been trying to, it found its bottom back here on August of 2017. So it's been almost a year that this thing has been trying to turn, and it's almost just now ready. And I'll bring that over here to the daily chart and kind of show you, look at all this chop. Look at all this. So, this is kind of where I'm going with Celgene, Gordon, is that if you want to try and catch the bottom for Celgene, there are potentially good moves. There definitely are, because, it would be an oversold condition. It would be an oversold buy. I mean, look at this, how here's price down. Here's the Moxie indicator up. And look at this. As soon as we got price to cross over the daily 50 is when we got the Moxie indicator cross through 0. Right on time, right on schedule. That's what I'm talking about. But it was shortly lived because the higher time frame chart was still in a downtrend. And remember, see how price right here on the daily chart looks like it just stopped in midair, and actually the indicator didn't really give us any clue. It's probably over here on the hourly, but I don't think I can go back. Can I? Yep. Oh, there we go. We can. Look at this right here. Nope, that's not this one. All right, trying to find all my time frames. Okay. This is how the Moxie indicator and its trading method all works together. This is actually a really great example. So we had our divergence on the daily chart. We got our price trigger here. Look at the hourly chart. We got our price trigger right here. It came up over the 50 and came back down and tested the 50. And well, Dennis isn't here anymore, but this is where he was asking me if I just want price to close above a moving average. Well, I really prefer for price to actually test the moving average. So if you see here, this is where we got our exact two-part entry. The Moxie indicator crossed through 0, we got our trigger, and price crossed through the 50, came up, came back down, tested the 50. That meant now that the 50 was strong because the indicator is now over 0 and positive, and look what it did. It just walked itself right up the hourly 50. And then it went sideways here. We got a whole bunch of Moxie warnings telling us that something was up, and then we got our trigger exit right there, right as price crossed through the hourly 50, and that's where you're out. So you're here, you're in there, you're out there. Look at that, 90% of the trend. You got 90% of the trend with this. And if you look here on the daily, you're saying, well, why did this thing just stop at the, middle of nowhere? Why did this thing stop? And so look at this. This is 9/26/2017. So we need to bring in the higher time frame. And look at this. Here is 9/26/2017. There you go. It ran right into the weekly 21 exponential moving average. And that's why I use the multiple time frames in context to say, hey, there's a downtrending moving average overhead. It's probably going to run into it. And now, fortunately, our lower time frame told us to get out. So even if you weren't looking at a higher time frame, you would still get out precisely. But you need to know why that's getting out. So kind of backing off a little bit, you can see price continue to run back up. And here's where it ran into the daily 200. You know, guys, this is why I use, moving averages, and that's why I use these moving averages, because they are important. The price respects them. You know, I didn't make this up. All I did was observe this. I spent years just looking at this stuff, and this is why I'm trying to teach you guys. I'm trying to teach with the webinars. That's why I'm providing the Moxie indicator, because I don't want you to have to spend the 6 years that I did trying to figure this all out. I want to be able to give you all the knowledge that I've learned over the 6 years and kind of shortcut your learning and give you that short circuit to get you spooled up for trading right away. And so going back to my current trend and trade, let's take a look at this. You know, here's that trampoline move. If you guys remember all the way back from where I started this this presentation, here's price below the 50 and the 200 on the daily, but the indicator is still above 0. So the indicator says, look, I'm positive, I got a lot of energy, I am over 0, and the price is below the moving average of where it should be. That it should not be down there if the indicator is up here. And so that acts like a trampoline. It just went doop and just gets shot back out. And you can see that's where it got shot out. We got some big volume coming in this thing. And so I took a trade on this a few days ago. And look at this, we even have another trampoline move on the hourly chart. We have price below the hourly 50, but we have the indicator still above 0. Even though it's red, it's still above 0, which means it is in the positive territory. So I'm going to be happy with this trade as long as price stays above the hourly 200. So that's kind of what I'm looking at. I'm not surprised that this thing is going to wiggle around for a while. I mean, look at the market right now. It's kind of getting beat up. You know, and I just showed you this thing has been trying to turn and base and create a new long-term trend for a whole year. So I'm just at the cutting edge of this, and that's what the Moxie indicator can do and help you figure this out. So I just sent out a promo, an educational promo yesterday about these big trend changes. So let me show you some things. So LONE. And this will give you a good idea of kind of the education that I provide for my subscribers, just general. I mean, not even relating to the Moxie indicator, just understanding basic market things and how stocks and trends move. So if you see here, and these are all going to be oil related because oil's gotten beat up for so long, but it's actually starting to turn. You can see here, price has just been going down and down and down and down, and it looks like it's starting to turn and it wants to go. In fact, look at this. We have a good pop up on this right here, but it fell back down. Now, obviously there's a good trade. Like if you're a quick trader, and I mean, here, I can show you right here. Here it is. Here's that trade. Here's your Moxie price signal trigger right there. We got a whole bunch of warnings. We had divergence. It got over the moving averages. Boom, get in. Up and up and up. Come back down. Okay, maybe this is trampoline move. Nope, it's not a trampoline move because it got rejected by the hourly chart, hourly 50, and we got a exit trigger. So look at that. Here's your exit. There's your entry. 90% of the trend. You just nailed 90% of that. And knowing here on the context of the daily chart right here, look at this. We had the daily 200 still going down when price tried to pop up. It's trying to bend the moving average in a way that it doesn't want to bend. And so what it do? It came back down. It sat on the daily 200, and then it waited until price could get back over the 50. And once it did, this thing exploded and walked itself all the way back up. And now look, we have the daily 200 starting to turn up. So now we have a new trend. So this thing's starting to go. So let me show you some others that are starting to warm up that maybe you guys want to check out. I see, look, I just did this presentation yesterday, so these are all fresh marks. So look at this. The salmon colored line is the 200 daily SMA. Notice how it's going down, but notice how price with the 50 SMA is going up. Those are not going in the same direction, and that the stronger, bigger moving average, which is the 200 versus the 50, is going to eventually win. And so these are not going in the same direction. You know, price tried to go, it eventually couldn't. It fell through the 50, came back down. Now there was a move here. It did bounce off the daily 50 or the daily 200. You know, we got our trigger, fine. But it came back down because once again, look at this. The 200 was still flat, and look how vertically screaming price was trying to go. That is divergence. Price went straight up, and the moving average was still flat, and so it pulled itself right back down. Now I know this is looking kind of complicated here, but the point that I'm trying to get is look where we are now. Look at price up, and look what it's doing. It is trending sideways, and it has now bounced off an uptrending daily 200 and is now following an uptrending daily 50. This looks to me like this is the start of a new long upward trend. So the 200 went from down to flat to now up. And I'll show you a couple more examples of this. See, FMSA was one. Look at this, same thing. So to begin this, we had the daily 50 trending up, but we had the 200 trending down. They're going opposite directions. So even though price was able to run for a while, it eventually got yanked back down because it wasn't being supported by the overall trend as noted by the daily 200. So it came back down to the daily 200, kind of found its support, okay? And then look here, where price was able to bounce off the 200 and cross over the 50 is when this thing started to its new trend. And this one actually looks like this is probably a good trend. Now, it got a little too hot and it needed to come back down here, and it's testing the daily 50. But look, we have the daily 50 and we have the daily 200 all in the same direction now. There we go. Now we have confluence and things are agreeing with each other. And if you're looking for a Moxie trade, here's where we got our price trigger. So that's telling us momentum is ready, but it needed to get past the moving averages. I mean, look, it's the same thing on the hourly chart. We had the hourly 200 trending down. We had the 50 going sideways, and only when it finally got over the 50 and over the 200, Moxie indicator over 0, telling us, you know, plenty of pressure and power. It tested both the 50 and the 200, and then this thing exploded and just walked up the hourly 50. And then look, we got our Moxie trigger exit right at the top, and what did it do next? Price fell off the 50. You got the entire trade right there. There you go. All right, so I think I just covered that previous person's presentation time, so that was great. I love talking about this stuff, guys. I could do this all day long. I love it. I enjoy it. This is what my webinars are like. I hope you see great value with it.